welcome to the Deep Dive. Today, we're taking a focused look at Apshu, or Focus Media.
That's right.
If you've spent any time in urban China, you've likely seen their advertising screens. They seem to be everywhere.
Pretty much ubiquitous, yeah.
We've pulled together a set of their own reports, annual, semi-annual, plus some third-party financial analyses to really try and understand what makes this company tick. So our goal today isn't just to list facts, but really to get under the hood, look at their business model, their place in the ad industry, where they stand now, and what the future might look like based on this info.
Exactly. Think of it as, well, maybe not an autopsy, but a deep examination. We're looking at the environment they're in, what they actually sell, their history,
Right.
and critically, what gives them that edge, that dominant position they seem to have.
Okay.
And then we'll look at their current health, financials, and try to read the tea leaves a bit on future trends.
Okay, great. So let's start with some context.
Huh.
Focus Media kicked off in 2003, and they're pretty much credited with pioneering this whole elevator media model.
They really were the first movers there, yeah.
For anyone who hasn't seen it, it's basically the ads you see on screens in elevator lobbies or, inside the lifts themselves. Super common in Chinese cities.
A captive audience, essentially.
Exactly. History-wise, they returned to the A-share market back in 2015. It looks like they explored some other things initially, diversification, but then really doubled down.
Yeah, that strategic shift seems important. They moved away from trying lots of different things and really concentrated on, well, building media, the elevator TVs, the poster frames, and also cinema screen ads.
Right.
And that focus let them build, real depth and serious market share. If you look at their footprint now, say, end of March 2024, it's just huge.
It really is.
Over 280 cities in mainland China and Hong Kong, plus they're in 95 major cities internationally now.
Yeah.
Big presence in places like South Korea, Indonesia, Thailand.
Singapore, Malaysia, Vietnam, India, Japan too, according to the sources.
Exactly. Southeast Asia is clearly a focus.
The scale is kind of mind-boggling when you break it down. Like roughly 1.05 million self-operated elevator TV screens.
Just the TVs, yeah.
Domestically and internationally. And then another, 1.57 million elevator posters, mainly China, Malaysia, India.
Posters too?
Plus partnerships with over 1,800 cinemas. That's like 13,000 screens across 271 cities just in China.
Those numbers definitely tell a story. It's that sheer scale.
Yeah.
And this massive infrastructure, it feeds into what the analysts call their dual network advantage.
Okay, what's that?
Well, first, you have this huge point-of-presence network, just loads of locations, and critically, they dominate in the high-value Tier 1 cities.
Nature hubs.
Exactly. And second, because they have such deep penetration in those key urban spots, it attracts a really large and diverse customer base. Advertisers know they can reach people there.
So it creates this sort of stable demand.
Pretty much, yeah. Demand across lots of different industries. So it's not just having screens, it's having them in the right places to pull in a wide range of ad money.
Yeah, so that leads into their competitive strengths, right? The analysis seems pretty clear. Focus Media is the leader, hands down, in elevator media.
Unquestionably.
What I found interesting was their position in the value chain. So upstream, they're dealing with property developers, management companies. But that side seems quite fragmented, lots of different players.
It is, yeah. And that fragmentation actually gives Focus Media quite a bit of leverage when they're negotiating leases for their ad spaces.
Right. They can probably get better deals. The leases are typically, 1 to 3 years?
Usually, yes. So they have some stability, but also regular points to renegotiate. Now, look downstream at the advertisers.
Yeah.
That side is incredibly diverse. Like in 2021, they had something like 9,168 different advertisers.
Wow.
Yeah, spanning consumer goods, internet companies, transport, entertainment, you name it.
So they're not overly reliant on any one sector.
Exactly. That diversification is a huge strength. If one industry, say, hits a rough patch, it doesn't cripple their revenue.
Makes sense. And we also see this consistently high gross profit margin reported, often around 60%.
Historically, yes. Around that mark, there was a dip in 2022.
Right, the pandemic impact on ad spending.
Yeah, that weakened demand temporarily. But the reports show a strong rebound in the first half of 2023.
And that kind of margin, 60%, suggests they've got some real pricing power.
Oh, absolutely. That high GPM is a really strong signal of their market dominance and, frankly, their operational efficiency. It's way ahead of most competitors.
So where does that come from?
It's a combination, really. That massive network we talked about, having the prime spots in busy urban areas and the strong brand they've built among advertisers, people know focused media.
Right.
Put that all together, and it creates a pretty significant barrier for anyone else trying to break in, a real moat, as they say.
Yeah, that term comes up.
Yeah.
Hard to replicate that scale and those relationships quickly.
Very difficult. Competing for the best locations and the big ad budgets is tough when someone's that entrenched.
Okay, so let's shift to where focus media is now. What are the latest developments? One theme seems to be this focus on life circle media,
Hmm.
trying to integrate ads into like the whole urban experience work, home life, entertainment, shopping. What does that actually look like on the ground?
Well, you can think of it as expanding beyond just the elevator itself.
Hmm.
Maybe more digital screens and office lobbies, perhaps ads in community areas within apartment complexes,
Uh,
potentially even partnerships with, local shops or services. The idea is to weave their presence into the whole urban fabric, catching people at different points in their day.
Not just the commute up and down.
Exactly, make it more integrated.
And technology seems key to this. The sources talk a lot about digitalization, intelligent marketing.
Definitely. They're using tech for network-wide ad pushes, real-time monitoring of campaigns, getting data back to advertisers so they can tweak things.
Yeah, there was that phrase, thousands of buildings, thousands of faces. Sounds like targeted advertising.
That's the goal. More tailored ads based on location, maybe aggregated demographics, making the ads more relevant and therefore more effective.
And this tech focus is vital for staying competitive, right?
Crucial. It lets them offer more value, better efficiency, better targeting for advertisers, and they're going further, apparently exploring AI quite actively.
AI, how so?
Well, the reports mention they've deployed their own proprietary AI model specifically for marketing.
Really? Their own model?
Seems so. Using it for things like generating ad creative ideas, developing campaign strategies, optimizing where the ads are placed, even doing deeper data analysis.
Wow, okay. That sounds like a significant investment in, staying ahead technologically.
It suggests they're serious about using data and AI to sharpen their edge.
It also sounds like they've built up a solid base of big long-term clients.
Yes, the reports highlight these stable relationships with large, high-quality advertisers.
And these clients stick around because they value the network, the efficiency, the experience.
And the brand reputation? Yeah. Focus Media is seen as reliable, someone who delivers. Those long-term deals provide a steady revenue stream and really prove the value advertisers see in them.
Okay, let's put some numbers on this. Financials. One analyst report, Haitong International, looked at 2023. Revenue was RMB 11.9 billion.
Roughly, yeah. Which was up significantly, about 26.3% year over year.
And net profit attributable to the parent company was RMB 4.8 billion.
Also strong numbers.
And looking ahead, that same report projected more growth, maybe 6–7% revenue growth for 24 through 26.
Something like that, yeah. And potentially even stronger net profit growth, maybe in the 8–10% range. They gave it an outperform rating, too.
Right, with a target price. And then there's the more recent data, the 2024 semi-annual report.
First half results.
Revenue up again, 8.17% year over year to nearly RMB 6 billion for the half.
And net profit attributable to shareholders jumped almost 20%.
Yeah, 19.75% year over year, reaching RMB 2.285 billion. So that positive trend seems to be continuing strongly into 2024.
It definitely paints a picture of a company that's, well, financially robust and growing.
We should also touch on their international expansion again. It's not just China.
No, they're actively pushing into overseas markets. We mentioned Southeast Asia, Indonesia, Singapore, Thailand, Vietnam, but also South Korea, Hong Kong, Japan.
And some of those international arms are already profitable, like Singapore, South Korea, Indonesia.
According to the reports, yes, which suggests the core business model can work, at least in similar dense urban environments elsewhere.
Interesting. And back in China, they're not standing still either, still optimizing locations.
Right, continuously refining their network, focusing on getting those high-quality spots in the top-tier cities. And there's another trend emerging.
What's that?
This idea of brand effect synergy. Advertisers are increasingly looking for platforms that can both build brand awareness and help drive sales.
Ah, okay. Not just one or the other.
Exactly, and elevator media is actually quite well suited for that. It's great for brand visibility, but seeing an ad repeatedly can also nudge purchase decisions. So it's becoming more attractive for different kinds of marketing goals.
Okay, so looking ahead now, future trends. What's expected to drive things for focus media and the ad market? The reports point to a general recovery in advertising.
Yeah, linked to growth in social retail, consumer spending picking up, hopefully.
And there's an interesting potential shift mentioned, away from just pure performance-based online ads.
Towards more integrated strategies, yeah. Combining brand building with performance metrics.
And that plays well for out-of-home media, like elevators.
It really does. Google is strong on the brand side, but this integrated approach makes its role potentially even more valuable.
Also, new brands emerging, new energy vehicles mentioned specifically.
Right, new players in various sectors, especially things like EVs, needing to build recognition, that usually means more ad spending.
And Focus Media, with its reach, is positioned to grab some of that spend.
You'd expect so. Plus, simple demographics, continued urbanization in China means more apartment buildings, more office towers.
Or elevators.
Exactly. Expanding the potential canvas for their media. And then there's the ongoing international expansion, especially in those densely populated Southeast Asian markets. Lots of room to grow there.
And underpinning all this is that continued investment in AI we talked about.
Yeah, using AI to make their ads smarter, their operations leaner. The overall goal seems to be helping brands communicate effectively and grow in, what's still a very competitive market.
Let's recap some key financials. That gross profit margin, consistently high, usually over 60%.
Except for that 2022 dip, yeah. It's a standout metric.
And there was a note about receivables as a percentage of revenue decreasing in prior years,
Yeah,
suggesting maybe a shift to more stable clients.
that seemed to be the interpretation, yeah. Though it ticked up slightly in early 2023 with the economic recovery, which isn't necessarily surprising.
And just as a mark of quality, it was mentioned Focus Media is part of the Haitong International Quality 100 A-Share Index.
Right, which basically means Haitong Securities views them as a high-quality, solid company within the Chinese market.
Of course, we have to mention risks. No analysis is complete without them.
Absolutely. The reports flag a couple of main ones.
Macroeconomic slowdown.
That's the big one. If overall economic growth slows more than expected, ad budgets are often one of the first things to get squeezed.
Makes sense. And the other.
Competition. Specifically, unexpectedly tough competition within the elevator media space itself could potentially lead to market share erosion.
So, things to keep an eye on.
Definitely. Standard risks for this kind of business, but important nonetheless.
Okay, so let's try and pull this all together.
Mhm.
Summing up, Focus Media seems like a really dominant player in China's out-of-home ad market, especially elevators.
Clearly the leader there, yeah.
They've built this huge network, got strong client relationships, and they seem pretty forward-looking with technology like AI, positioned well, it seems, to benefit from the ad industry recovering and this growing focus on brand building.
I think that's a fair summary. Their scale, the prime locations, the tech adoption, it gives them a strong foundation. And the shift towards integrated brand and performance campaigns definitely aligns with what elevator media does well.
Right. So maybe a final thought for you, our listeners, to chew on. Given Focus Media's, well, almost pervasive presence in city life and how they're embracing digital tools and AI, how might this changing ad landscape affect them going forward?
Yeah, will these trends further cement their leadership? Or could new forms of digital out-of-home advertising or changing consumer habits in these hyper-connected cities actually challenge their dominance?
Interesting questions. It's definitely a dynamic space. Yeah. Focus Media is certainly a company worth watching. Thanks for joining us for this deep dive.